Yo guys, Ferocious here. In today's video I'm going to talk about how I frame my daily bias. Before I move on with the video, I want to say that I do not claim any of these concepts I'm sharing in this video. This video is just about how I approach the market day by day and how I use these concepts. So the topics I'm going to talk about are alignment, key levels, candle types, candle 2, candle 3 and 4, confirmations, and I will show some little examples. So let's start with alignment. The alignment I'm using for the higher time frame and to set a bias is pretty simple. Um, of course it's fractal, but I'm using the daily time frame to 4-hour swing formations and confirmations the most of the time, but you can also use the monthly time frame into a weekly, the weekly into a daily, and the daily into a 4-hour. But the weekly to daily and the daily to 4-hour are the ones I'm using the most of the time. So I think this is pretty straightforward, and of course it's fractal. The key levels I'm using to create my daily bias are old highs and lows, like a swing high formation here, a swing high low formation here. This is fractal, of course, so if you use a monthly swing high or swing low, that's fine too. If you use a weekly one, it's fine, of course. And I'm using the weekly and the 4-hour the most to frame my daily bias. Same for fair value gaps. I think this is pretty straightforward and simple to use and to spot them on the charts. And again, it's fractal. You can use monthly gaps into a weekly swing formation. You can use weekly gaps into a daily formation, and so on. So I think this is pretty straightforward to what levels I'm using to create my daily bias. So now let's go over to the candle types I'm using in my trading as well. I'm using reversal and continuation candles. For a reversal candle, I want to see price closing inside previous day range, paired up with a high time frame key level, and we use the alignment we discussed earlier. Like we have a weekly key level, we use a daily swing formation. We have a daily key level, we can use a 4-hour swing formation. And we are using continuation trades as well. If we can frame a higher time frame key level, like a monthly low, we want to see price continue lower and price closing beyond previous week low, and trading aggressive lower like this is a good signature to trade continuation candle on the next week to the drawn liquidity. Of course, both scenarios here are paired up with higher time frame key levels using the alignment I discussed earlier. So now let's go over to the first candle, and this is candle 2. This is a reversal candle where we hit a relevant level, and this has to do with alignment like I said earlier. For example, we have a weekly relevant level here, like a swing low. We want to form a daily swing formation, and we want to see price actually reverse and close back inside the range. We can trade candle 2 as a reversal candle, but we do not expect to see this candle reverse and expand all the way higher. So therefore we will target, for example, the daily open or a relevant lower time frame swing high. We do not expect this reversal candle to deliver the price movement you want to see on the higher time frame as well. So this is basically the same for bears as well. We have a key level, a closure back inside the range, and we want to see the next candles continue to trade away from the higher time frame level. And again, to trade the C2 candle, we want to use some confirmations. We are going to talk about this later to actually form a true reversal inside this C2 candle. So now I'm going to talk about candle 3 and 4. This is actually a continuation of the C2 candle we discussed earlier. For example, we have a weekly relevant level here. We want to form a daily swing formation. We want to see C2 candle close back inside the range and C3 and C4 expand all the way higher. To trade those continuation trades, we do not want to see the daily candle form a large wick. So for example, this C3 should not retrace all the way down near this low put in here, and we should just form a small opposing wick and expand higher. Same for the C4 candle. If the C3 candle did not hit any relevant level to reverse from or any higher time frame level, we do expect C4 to continue to that level as well. Same for bears. We have a relevant level, C2 closing back inside the range. There is no need for price to continue higher since we already reversed, and we want to see C3, C4 continue the movement C2 started to the relevant level we want to trade to. And if C3 did not trade into any relevant level to reverse from, we do expect C4 to continue to that level we have in mind. So here we want to also see C3 open up and not retrace that deep near this high and just continue. Same for the C4 level as well to continue to the drawn liquidity. So now let's talk about the confirmations I'm using to frame the C2 and the continuation candles. This is one of the confirmations I use, and this is the one stage crack I use. So it's just a regular SMT where asset 1 takes out a relevant high, asset 2 is doing the same when asset 3 is failing to take out the high, but we all expand away from the SMT formation. That's very important. When we want to confirm an SMT, we want to see all the assets expand away from the formation. So this is basically an SMT by using swing highs and lows, but we can also use SMT based on previous candles highs and lows, so consecutive candles, right? So here we have asset 1 taking out this candle's high when asset 2 is doing the same, while asset 3 is not taking out this high, but we all take out the relevant swing. Only thing is asset 3 is doing this way earlier and making a lower high here while making a higher high on asset 1 and 2. This is basically another form of crack we are using here. So this is the swing cracking correlation, and this is the consecutive or previous candle high cracking correlation, right? So now I'm going over to the second one. This is a two-stage crack. It's basically very much the same as the one-stage crack, but we can identify strength switches. For example, here we have on asset 1, 2 and 3 all this relevant high. When asset 1 and 3 are taking out the high, when asset 2 is failing to, but we form a strength switch here when asset 1 makes a lower high following after the higher high, right? So we have higher high into a lower high. Same for asset 3, while asset 2 is making a higher high. So this identifies that asset 1 and 3 are flipping strength and are becoming weaker, and these assets become the most favorable to short in this example. And of course, it's just the other way around for a bullish one. And of course, we have again the consecutive or previous candles SMT as well. So here we can see all the assets are taking out the swing high, and then we can start to look for a consecutive candle SMT on the high, while we can see asset 1 and 2 are basically the same when asset 3 is a little bit different. So in this example, asset 1 and 2 are the most favorable to short away from this swing high here, since they are flipping strength, and asset 3 is becoming a little bit stronger, but it's still weak. And this is a very good example where you can see a two-stage SMT formed by previous candles, and we can see in both examples all assets are expanding away from the SMT, and that is how you can confirm true SMTs. This is basically fractal, so you can use this on lower time frames as well. So now let's go over to the last confirmation I'm using to confirm the high time frame candles. So this is basically all the assets are taking out the relevant high, but we identify a strength or weakness due to candle closures. Here we can see asset 1 and 2 are closing bullish when taking out the high, where asset 3 is closing bearish. When asset 3 is initial stronger here, you can see it expanding higher on asset 3, closing near this high. When asset 2 and 1 are a little bit further away, and you can see asset 3 flipping strength by being stronger in the first place, and then we are flipping strength and we can identify this due to this candle closure. So asset 1, 2 are closing bullish here, and asset 3 is closing bearish. So this is actually the last example I'm using for confirmations and form true reversals on the C2. And of course this is fractal, so you can apply this to a 4-hour candle as well to, for example, um, form a low of the day or high of the day. And you can use this on the daily to form a high or low of the week. Now I'm going over two examples with both being moves I actually traded as well. First one is RTY. We have a alignment of monthly key level into looking for a weekly swing formation, right? So um, this monthly fair value gap caught my eye. So what I'm looking for on the aligned time frame is a swing formation like we get here. We can see this week hitting the relevant level here and closing inside this low and actually inside previous week low, marks up being a C2 candle, looking for a C3 expansion higher. What do we want to look for inside this candle to expand higher? We do not want to see this week open and trade all the way near this low here. We want to see it make a small opposing run and then expand higher. We can actually fractalize this move as well into the daily. Since we have our higher time frame key level, we can see we form a daily swing formation here as well. By trading higher, we have our CASD here, and we can clearly see price closing through the highs, right? Like I said in my slides, we can see price is closing actually through the previous candle's high here, marks up like this. So it's pretty bullish, and we can clearly frame continuation trades here by seeing all those candles closing through previous day's highs, making little opposing run down, little opposing run down. Same for this one into relevant highs, this weekly relevant high. So we can all fractalize it down from the monthly, making a weekly swing formation into the daily, making a swing formation as well with this as a C2 candle, making a CASD here, trading the continuation since we can clearly see price is willing to go higher by these daily closures here through previous day high and closing way beyond that as well. So this is basically the short first example by making a top down from monthly to weekly to daily fractal as well by just only looking at candle closures around previous candles highs and lows for reversals and these ones inside here for continuations, right? So now let's go over to the second example. This one is on the Nasdaq, where we have our weekly relevant swing here. By with our aligned time frame, we want to look for the daily to form a swing formation down here. So let's drop to the daily time frame like this. We actually form our swing formation down here by this candle trading all the way down, hitting the relevant level, by this candle making a C2 closure by trading through the low and closing back inside the range. Then we can see this candle being a continuation candle. So on this day we can look for continuations. Same for all the other days here. All closing through the highs, we can look for continuations to trade higher. And we did actually had an SMT on the daily here as well. And like I said in the video, how do we qualify an SMT? By all assets trading away from it. We can see Nasdaq taking the low, making a swing formation, and at the same time YM is not taking the low, but is also making a swing formation here and making a CISD here. So this is basically how I do my analysis on the higher time frame into the aligned time frame, looking for confirmations, and we qualify the reversals here, for example on this low with an SMT, one stage, two stage, or a PSP like I explained in the video. And then we want to look for continuation trades on the daily time frame as well by seeing little opposing runs down on the daily and then trading higher. Working on the next video already, so likely gonna drop this next week as well, and I hope to see you all in ladders, right? Peace.